Ryan, how you doing?
I'm doing great, man.
Finally. Fucking hell. I can't believe it's like
Finally.
400 and something shows and you're on.
Well, I'm a shitcoiner, so I know. You had everybody else to get through that's less
That's
open-minded than me.
That's actually not fair. You are a Bitcoiner. I know you're a Bitcoiner at heart. You just have a business that does a lot of shitcoining.
Yeah. We could talk about that.
Well, we can talk about that. We've a lot we can talk about actually because you sent me your report. Fucking hell, man. How long does that take you?
So it takes about about a month to 10%, 5 to 10% of my annual bandwidth about, and so it's kind of like a running joke with the team that I secretly hope it flops every year. That way I don't have to write it the next year. But, there's a lot of reasons to do it, right? It's a synopsis of all the research that our team has come up with through the year. It's a good marketing asset for us. We do a lot of co-promotion. We got a big new product launch coming out, this coming week. So there's a lot of things that go into it. Obviously it's good for newsletter growth and everything. So it's worth it, but barely, because it kind of puts me to the end of my wits by the end.
A lot of, how many words?
It's a lot. So, well, I don't know how many words, 165 pages. I didn't do the word count, but I think it's 165 pages, probably about 100,000 words, right? That's about that.
It's a short book.
Yeah, it is.
Yeah.
Yeah.
Well, listen.
So
I obviously want to talk to you about the Bitcoin stuff.
Of course. We had a full section on it, so.
It's a good section on it.
Good.
And we can go through all of the 10 points on there.
Amazing. I might even remember a few of them.
I might want to talk to you a little bit about Web3.
Let's do it.
Because I think it's annoying. I think it is Web VC.
That's why people come.
Yeah, I think it's annoying.
They come for the juice, not for us high-fiving each other. See, you got to have more people like me on.
All right, we can do that. And we can possibly also talk about regulation, because that is an important thing. I've just got back from DC.
100%.
Made a couple of shows there, right in the DC crowd, where regulation is a hot topic. But let's talk about Bitcoin. You do dedicate a whole 10 sections to Bitcoin, your 10 hot takes. But I think a good starting point is your first hot take. Look, we got him here.
He's always watching. I saw.
You saw him.
I saw. I wasn't sure if you also packed the picture of me, but I figured that's by your bedside still at home.
Yeah.
So, but Peter's right here in the corner for those that are just listening, watching, waiting.
You got a one-off cameo appearance. You got the one-off cameo, but he's become a permanent fixture now. He travels with us.
Yeah, that's good.
Keep an eye on him. So listen, let's talk about Bitcoin and gold. Bitcoin taking on gold. Like I interviewed Saylor the other day. I disagreed with him. He said gold is the enemy of Bitcoin, and I disagree with that move. I think, and the reason I disagree with it is I don't think we need to make enemies of gold bugs, because gold bugs who don't own Bitcoin are the next Bitcoiners. Really should be. Like, we agree on the problem.
I would compare it to something slightly different, right? So my freshman year in college was 04, 05, right? And that freshman year, maybe 5%, I don't even think 5% of the laptops were Macs versus Dells, right? And then by senior year, you're starting to see the progression. So all the young people were like first to use Macs, and they were first to use all the Apple products and kind of consolidated around the iOS ecosystem. It was just a better design. It was, it was young, it was hip, it was just a better product, right? And I don't think that Macs have overtaken the rest of the PC market still. But as you see younger generations coming up, they're going to have a different set of tech preferences, and they're going to have a different set of money preferences. So I don't think you have to be the enemy of gold, because they're just going to age out, and it's going to be a very gradual rotation. And in the meantime, gold will be a collectible for jewelry. But in terms of the money use case, I think that's just going to be a kind of a natural, multi-decade switch that we see in the next 15, 20 years.
It's more than jewelry, though. Industrial doorstops.
I mean, there are. I mean, I know you're kidding, but there are some industrial use cases. It's mostly jewelry. So I actually break down in the report. I mean, if you're talking about like the true comp, it's not $11 trillion. It's more like $6 trillion. So $6 trillion would be investment purposes, and central bank reserves would be the gold market cap, which leaves us about 5x to get to parity with the gold investments comp. Now, if you're going to lump in jewelry and all that, that's where you get to the 11 trillion, where there's, you can get to another, you can get to a $500,000 Bitcoin. But I don't think that's the right comp. I think it's more like, 250 to 300,000 gets you to parity with gold as an investment at today's prices.
It's the flippening that matters. We're going to talk about the other one as well, but
there's all kinds of flippenings. Yeah.
You think how long do you think we've got till we flip gold? 5 years?
I don't know. So much of it depends on how these cycles actually play out, right? If you keep seeing the 4-year boom bust cycles, the extreme corrections, we could see it this cycle and then have a pretty big come down, right, all the way back to 100,000. But I don't think we want that for a whole slew of reasons, not the least of which is you go up to $250,000 Bitcoin and then down to 100,000, you're talking about like actually triggering a real world global recession or minor depression, because that would be so much money to have evaporate from the financial system and the markets.
So you believe Bitcoin?
I think if Bitcoin
there's a contagion effect.
Well, if Bitcoin remember, we're at about $1 trillion right now. So if Bitcoin corrected from 250,000 to 100,000, that'd be a $3 trillion decline in asset values for a relatively small niche of investors, because I don't think it would take a whole lot for that market to move that market to 250. I don't think you need like all of Wall Street and a dozen countries and all the big corporates putting it on their balance sheet. I think it could be a boom and bust. I personally don't think that's going to happen.
Do you think the cycle might be breaking?
I think it is, and I hope so, because it means that the bear markets will be shallower, and you're not in this like feast or famine cycle. It will look a little bit more like tech has the last decade or the last 15 years. Since we came out of the trough of the .com burst, where you see things get funded, you see kind of slow and steady upward trajectory, and you see good projects and good teams deliver according to the performance of their product and like specific KPIs, not just, okay, we're in a bull cycle, so throw as much money on black as you can. We're in a bear cycle, take it all out, go home, come back in a couple of years. I don't think, who knows? And the market's out of anybody's hands, but I'm hoping, I kind of expect that maybe there's a cap on how crazy we can get this time around, maybe because of the other assets that could steal a little bit of the Bitcoin thunder.
We'll come to that. It's been a wild year, Ryan. I did a couple of shows at the end of last year talking about expectations for this year. I never saw a scenario where a Tesla would buy $1.5 billion of Bitcoin this year, and I never saw a scenario where a country would make Bitcoin legal tender. There's been some pretty. You
should have read my report last year.
Is that what you said? Did you put it in last year?
Well, I didn't say Tesla and El Salvador, but I think that was one of the macro trends. I think in general, it seems like it's inevitable, right? Like,
of course,
like there was game theory involved where, Bukele's looking around, if I'm first, then there's uncapped upside.
Yep.
If I'm wrong, well, there's a lot to fix in this country anyway. So that's going to be, maybe the least of my problems, least of my worries. So I think it's a good asymmetric bet that you'll see a lot of other emerging market leaders probably make, especially the younger ones, in the next few years.
Did you think we would have another country by now? Or do you think people are waiting to see?
I didn't think it would be a big country. I think the smaller countries are probably looking to see how things play out with the IMF and what all the externalities are that could potentially impact El Salvador. Because I think there's like a little bit of a Venezuela effect too, right? Like Venezuela has all the oil. I think they've got the largest reserves even ahead of Saudi Arabia, and that hasn't fixed what's a colossal nightmare in Venezuela right now politically. So now I'm not saying that's money related, but I think there are some similarities where if the IMF and some of the other financial leaders of the world decide to crack down or kind of limit commerce with El Salvador or otherwise just make life difficult because they don't want Bitcoin fully integrated in the financial system, then obviously there's bigger issues that El Salvador has to solve for. I don't know. That's one bit of conjecture, but I would be surprised if we don't see other small countries come into the fold. It really is going to depend on what the next 3 to 6 months look like, and if we can establish some medium-term lower bound. So you don't see like another sell-off to 25,000. That's a risk that no one's going to take. But I think if we trade sideways for a while, you'll absolutely see other central banks and other companies start to think about this as a balance sheet asset.
How important do you also think the volcano bond is, and how much have you looked into that? Because
honestly, I haven't really looked into it. Yeah, I mean, educate me. I've read it about this being one of their plans, along with like their Bitcoin city and the weird diagrams of the dystopian looking like citadel. But the volcano bond in particular, I'm not as familiar with the mechanics.
Well, the Bitcoin city I'm less excited about because one, what is it? And how much infrastructure has to be built in the city? And how much time does it take to build the properties in the city? I mean, it sounds like something you can work towards, but might be like a decade.
Yeah.
I mean, multi-decade project to be something that looks like one of the artist impressions that you get of this. But the bond itself is kind of interesting. I mean, I don't know too much about it. I'm not a bond guy. I'm not Greg Foss, but my understanding is they're looking to raise $1 billion, of which half will go straight into Bitcoin. Half will be used to build out their mining infrastructure. There's a 6.5% coupon, which is half of the traditional El Salvador bonds. So they really have to return 65 million a year on that. And I think there's a 5-year lockup on the Bitcoin they hold. And then at some point they start scaling out that Bitcoin, and also the earnings from that go to the bondholders. So it could pay well in excess of the 6.5% coupon. But the interesting part of it looks like it's built into the game theory of Bitcoin. It's like, if we have this, well, over a 5-year period, Bitcoin does what it does, then the bond will pay. And they're talking about doing 10 of them. But I think if it works, if they can raise the money really quickly, I think that's an incentive for other countries to go, they just raised $1 billion outside of the IMF in a very short amount of time.
I always love bets like this because they prove nothing in either direction other than Bitcoin is volatile, right? Yeah, I mean, it's you're betting with other people's. If you gave me $100 to borrow and I knew that I could default without you taking out my kneecaps, I would probably invest in something that could pay off 10x if I could only lose $50. You're probably not going to lose $100, right?
Yeah.
So it's you're basically taking nation state capital to make the same, speculating with other people's money. But that's what countries are designed to do, right? So if you're thinking about shooting your shot as an up and coming country that's trying to again reform a lot of things aside from just the financial status, then making a bet on emerging tech, I think, is a pretty smart play. Now I know. Again, we're going to get a little bit further into this, but I wonder if Bitcoin is too limiting for a country like El Salvador, and how that's ultimately going to play into their competitive positioning in terms of attracting talent. Maybe the Bitcoin-centric community, can I say maximalist?
It's not pejorative to me.
Okay, all right. I don't know. Some people get touched. We're both Bitcoin holders here. So I'll say like the maximalist crowd, right? That's not a slur when I use it. The maximalist crowd, I wonder if it's a little bit too limiting from the part of like a world leader, someone like Bukele, or if that kind of dedicated like maximalist contingent is enough where they're going to say, you know what, I don't care about Portugal and Singapore and Estonia and all these other like shitcoin countries. I want to go to someplace like, El Salvador, support them, either at arm's length or physically or somewhere in between, because they're kind of going all in on this asset. And I think you're starting to see that play out with companies too, right? Like MicroStrategy. I'm not sure that Saylor is going to put Ethereum on the balance sheet.
I don't think he is.
I don't think he can, right? Like, not only do I not think he is going to, but I don't think he really can. I think, he's kind of boxed himself in. Jack?
Well, it would dilute his play.
That's what I mean. Yeah. So number one, you dilute the play. And, I think you're seeing, you saw this play out potentially with Twitter and Square as well. I'm,
reading between the lines?
Well, I think that's probably pushing it. I think that what Jack can do with Bitcoin at a financial company like Square is an order of magnitude more interesting than anything you could do with Bitcoin on Twitter. And if he cares about Bitcoin, leave Twitter aside, go all in on Bitcoin and Square and the financial elements. If he cared about Twitter and some of the crypto use cases, then you have to broaden out beyond Bitcoin, right? So I guess the more like blockchain oriented you want to be, if you're a Bitcoin maximalist like Jack is, or at least someone that's like heavily in that direction, then you want to do it through the financial company that can actually focus on Bitcoin versus NFTs on Twitter are going to be run through Ethereum, right? A bunch of different applications on Twitter that are crypto-centric are going to be Ethereum and non-Bitcoin blockchains. So I think maybe that's the tail wagging the dog. But I think it's definitely a better thing, I think, for both parties that Jack has picked one. My point is he
picked.
Did he have to? Maybe he may have had to. I'm not sure. But I think you've got that with Saylor, you've got that with Bukele, you've got this, kind of playing out with leaders, corporate and sovereign and everywhere in between.
Yeah. And
this happens with influencers too. You know this.
Well, I went the other way. I don't like the term influencer. I find that pejorative. I'm a professional journalist. Influencer. No, it is. And look, it's tricky. I mean, it depends on who you are.
Well, you are a journalist. I was talking about me.
Come on. You're a journalist. You were a journalist before I was a journalist.
The lines are blurring.
They are. They are. Yeah. I mean, people call you a journalist when they want you to do a better job, and then they say you're not a journalist when you think you've done a good job. You can never fucking win.
Or they call you a bad journalist because you own the things that you're talking about. That's my favorite. And that's why you get all this garbage coming out from the New York Times and all these other, cut rate publications. You can't use the stuff and you're going to write about it, which is why the quality of the writing's so bad.
Maybe journalism's just dead. It's all entertainment.
Well, I think everything's getting decentralized. I can never quite tell when you're being tongue-in-cheek, but I do think journalism is dead.
No, I mean, I kind of think it is in the traditional sense, is in that there are journalists out there doing great work. But for me, a journalist is out there to tell the truth, to investigate a story and tell the truth.
So this is a really, I think, important insight, because I think that there are great journalists, and what we're seeing is the institutional brands of journalism are complete shit. Almost across the board. I mean, if you think about what the New York Times has done running out Barry Weiss and some of the other senior editorial staff that they have, if you don't kind of fit to a certain narrative, you're out. I mean, if we won't even get into both sides of like the 24/7 like cable news media. I mean, everybody knows that it's toxic to get that type of information diet unless they're
I don't think everyone does know.
No, I'm saying unless they're actually like in it and they've picked a side and they're like, no. And their answer is always, this is healthy because this is what I watch every night. I think that people that don't watch news, right, will look at both sides and say, yeah, both of these are not good.
Both are full of shit, let's be honest.
Yeah, and I think there's a reason that Substack is spiking, that you're seeing, more people get their news from Twitter and from, people complain about the algorithms, on Facebook or Twitter and say that it's, inflammatory. But at the end of the day, that's still better than getting all of your information from one news channel, right?
The same temptations exist for these people who've gone out on their own. So Substack is great. I pay for Barry Weiss. I pay for
Glenn Greenwald. Let's see how much of an overlap we have.
Yeah, Matthew Taibbi. And then a few other smaller people I know.
Same.
I can't remember if I still got Lee Quinn's actually, but I did subscribe to hers. I've got maybe like 5 to 10 on Substack, and they're great. The problem is that Twitter still rewards audience capture. It punishes if you have any kind of if you're on any kind of like end of a political spectrum. It rewards audience capture. You see this with Tim Pool. I think Tim Pool sometimes is brilliant smart. And other times I see he's very inflammatory because the audience capture algorithm rewards him.
Yeah.
So you really, when people talk about, oh, well, the mainstream media is dead, but we've got these great new, freelance independent media operations. They've got their own podcasts and stuff. Some of them are just as guilty as the mainstream for audience capture because they get rewarded, because they get likes when they speak to their audience. And so they have to speak to their audience, and their revenue model is based on that. So finding someone who's truly independent that you can trust is hard. I do trust Barry Weiss. I do trust Matthew Taibbi. I don't always agree with Glenn Greenwald, but I do trust him.
Exactly.
So there's very few journalists I do trust. And I think when I say journalism's dead, I mean, let's better say it's dying, because there are some people out there, but previously, when you would trust, maybe you shouldn't have trusted a newspaper. You come pick up the newspaper you trust and expect some good investigative journalism. I used to believe it was there. I just don't believe it is anymore.
I take the first day in prison approach to journalism, which is I try to find like the biggest enemy that I can find at any point in time. punch them as hard as I possibly can, and then I go relatively easy on everybody else, right? So you can kind of maintain this diplomacy, still call it both ways, right? You know, I mean, this happened. Think about how I got into the industry, right? Mt. Gox and the Bitcoin Foundation, and then, you know, Ripple and my crusade against Ripple, 3 years ahead of the SEC, by the way. And of course, now it's the current SEC chair. So
Ripple, are they actually doing anything with Ripple? Does it exist for like any purpose?
Is Ripple the company doing anything with Ripple, or?
Well, I mean, I conflate if Ripple and XRP is the same.
Yeah.
Even
well,
though
I mean, no, so do I, but I just, for clarity and conversation,
clarity.
It's, I mean, I think it's tough for them too now. Here's the thing. You know, the first critical piece, I mean, I got much more critical once I started to dig into it, you know, in 2018 and figure out how they were doing their treasury sales versus their marketing for XRP. That's when it started to, like, I started to get a little bit crazy. But my first post on Ripple and its use of XRP was actually pretty like steelman of like, here's what they're saying. Here are the things you need to believe to get excited about like XRP at 350. Remember, like I wrote this literally the day the market's up. And basically the punchline was, you're out of your mind. But the way that they were treating XRP, the currency, as like a bridge currency was interesting. You just knew that no institution was ever going to go for it unless they were getting bribed. And like, this is exactly what happened with MoneyGram, right? If you actually looked at the documents and like all the court proceedings, all the stuff that's come out since, MoneyGram was essentially like, yeah, I mean, if you want to invest and pay us an enormous amount of money that we're going to be able to liquidate, and we cleared this with our lawyers, and like, and this is, if this is all good, and we literally don't have to say a nice thing or actually use it or hold it or anything like that, we'll take it. And so, you know, it was. Yeah, it's
a lot of stinky bullshit in there, Ryan.
No, it is. But so here's the thing. We have outdated securities law in the U.S.
Yep.
90 years old, 80 years old. I mean, the court precedent that we're talking about, 75 years old, about fucking orange groves in Florida, right? So we should probably update it for the fact that not only the internet exists, not only PCs exist, but like modern cryptography exists, like post 1946 in the Howey case. The reason I have talked about it, and in many ways, this was kind of like what led to the founding of Messari. Like my first post introducing Messari, like months before the company even officially existed, was like, we need an open source editor because the SEC is not up to the task structurally, not because they're not competent. I mean, we could talk about the institutional competence or whatever, but structurally speaking, this is new tech. You need like a new framework. And the irony is, everything that I wrote about has since come true in multiple fashions, right? Like one, we're doing pretty well. Two, like nothing has actually gotten solved in terms of like community disclosures for tokens and all the worst things that, you know, Bitcoin maximalists like hate, and I hate, like as someone that kind of leans that direction. It still persists and it's never really been corrected. And one of the reasons is we haven't had anything like a safe harbor that would have allowed for some cooling off and the ability to actually like pick and choose, not necessarily which are good projects and which aren't, but which are just fucking scams, right? So like what behavior is actually going to be permitted? Because I think what Ripple is going to argue in court is, we didn't get any guidance from the SEC. That's true. They gave us mixed messages. Also true. They said that ETH was probably sufficiently decentralized. That's true, although the SEC is now trying to backtrack. So like there's a bunch of things that I think are on their side, not to mention the former SEC chair, Mary Jo White, who's on their legal team now. But if you had something like a safe harbor that kind of modified the disclosures, the shit that they did with the selective disclosures and like basically allowing all their insiders to dump on retail throughout and market however they wanted to, you know, if you had a safe harbor, they wouldn't be on the hook for securities law violations. They'd be on the hook for fraud right now.
Wow.
I'm saying like,
okay, yeah.
If you had written the safe harbors in a certain way that are like common sense and they're based on like insider holdings and like how they're reporting them, then like all these like insider deals, I think would have been closer to fraud than like a securities law violation. But I don't think that they're actually guilty of fraud right now, just because, you know, we don't do anything halfway intelligent when it comes to regulating tech or tech related finance.
Yeah, I'm not really sure where I want that one to go, because it's I mean, I've always thought XRP is bullshit. I've always felt Ripple have lied to people when they've dumped billions of tokens
Mm-hmm.
and enriched themselves. But I'm not really sure I want them to lose a case to the SEC.
The enemy of my enemy is my friend.
I mean, I think Ripple dies anyway, but I will be interested to see how these things play out, because there are certain things that just seem a little like at the moment. One of the things that I mentioned, Web3, why it's bothering me is that I'm background before doing all this, I had a web business. We used to build websites. I went through the transition from Web 1 to Web 2, and it was about how do we make the internet better for people.
Mm-hmm.
We had a more interactive web. The tools that came available with CSS, I'm trying to remember now, just to make the experience a lot better on the internet. As you typed into Google, you get the suggested results. Lots of little more interactive elements. And I don't remember when Web3 was first being discussed, or the next phase of the web, that people talked about tokens. They talked about the decentralized nature of the web, or owning your data, and privacy being an important part of the web. Decentralization is important, but I'm really concerned trolling, but just the way Chris Dixon is really pushing hard this Web3 narrative of a world of tokens, which really suits the investment thesis of A16Z. And I just wonder how much we're going to pollute the potential of the web with a flood of just bullshit. And it does worry me. I think Web3 has been co-opted. I think Grubel's got it best when he said it's Web VC. And I think if you were trying to design or think about a Web3, what we need, for me, it's not a world of tokens. Decentralization, yes, is important. Data ownership is important. Privacy is important. A native digital currency like Bitcoin is important. A basket of shit coins and just isn't the world I see for the future of the web. I don't think it makes it a better experience myself.
There's so much to unpack there, right? Like it's such a sweeping statement, and I'm sure there are parts that I agree with you on, and there's probably some parts that I disagree with you on. So, first of all, let's just say the name Web3. I actually think Web3 is much better than crypto in terms of new audiences and being a little bit more friendly and to regulators and not scaring the shit out of people, and like new audience development. And I think it's maybe a little bit of a better catch-all term, because it can, now you can include digital art and all these like NFTs and, the metaverse goods and anything that will basically like settle with a blockchain or stable coins, right? Like things that people don't intrinsically think of as like crypto, because that sounds a little Wild West, right? So I actually think it's a really good meme, and I think it's important for adoption and maybe just a slight rebranding from crypto, given how hostile I think we're going to see things get in the regulatory sphere, particularly in the US in the next year. Maybe in Europe to a certain extent, but I think Europe's a little bit more balkanized, and you're seeing groups like, in Portugal and Germany and France, they've all got slightly different tax and arguably a little bit more friendly. So I think Web3 is definitely an upgrade from a branding standpoint. Point two, something can be self-serving and also be true at the same time, right? And so you really have to like unpack the threads there. Is this self-serving? Is this in A16Z's best interest? Yes. Is this also in the best interest for the U.S. tech environment? I would also argue like the answer is yes. So I don't think that the interests are necessarily misaligned.
I think you've missed the audience that I'm thinking about, though. I'm thinking end user.
No, because I think that with these Web3 protocols, they should have opportunities for their end users to actually meaningfully participate in the upside if they're early and they're active. So again, we're conflating a couple of themes here. If you're talking about a VC chain that goes public at a $20 billion valuation, yeah, not as interesting, but I think that's going to get worked out in the market, because I think users are starting to get conditioned to like token upside in return for participating in some way, shape, or form of these networks. And the way to think about it is like cooperatives, right? Cooperatives are mutuals, right? So REI, or like a mutual insurance company, they're ultimately going to pay out to their members. If those businesses waited until they got to $20 billion and all of the wealth and all of the user rewards were privatized amongst private investors like venture capitalists, yeah, it's bullshit. No one's going to actually care about that brand as an end user. But then you're going to have competitors that take that more seriously or get the balance right. And I think that's something that we're going to see get figured out in some of these early experiments. And frankly, you'd rather they get figured out now when the stakes are relatively low versus, 5-10 years from now. I think that the VCs and kind of the rounds are getting underwritten right now. Yeah, you've got a lot of the same kind of like usual suspects and usual names, but I also think a lot of like individuals like super angels are starting to gobble up like good chunks of these rounds because they're just viewed as better connectors and more strategic for like connecting protocol to protocol and like how these communities actually like ebb and flow and trade off of each other and integrate with each other. There's not an endorsement for any of those tokens right now because, I don't know what fundamental value is for most of these projects. But it is to say, I think it's likely that some of the big winners early will be the VCs because they are early to the trend, right? Over time, I think that more of these protocols will democratize. And you're going to need to share the incentives. It's the same way that we're talking about why is Web3 a threat to Facebook and some of the other big tech companies? It's because you've basically now with tokens conditioned a group of users that they should have upside. They should have financial upside for being earlier valuable members of this network. Facebook gives you nothing, right? So when the starting point is nothing and I could get something and I could get even more, potentially a lot more if I'm early to this like budding Facebook or budding Twitter or whatever, now it's a different value proposition. And which one do you think the users are going to go to? Do you think they're going to go to the one that has all the VCs, or do you think they're going to, in terms of an actual user, not just a speculator in this crazy environment we're in right now where everything goes, swings wildly, the actual users of those products are going to go for the peer-to-peer alternative versus the one that's owned by the VCs. I think this is going to get worked out naturally.
I think they're going to go to the user experience that delivers what they need, what they want.
My point is, I think token economics, like rewards to some of these early users, that is part of the user experience, right? That is part of the product, right? Now, other things equal, you're going to use a product that gives you more money. Other things equal, you're going to use the better product, period, right? So it doesn't matter like, if you're going to pay me like $50 a year to use, Friendster, I'm still going to use Twitter,
Friendster.
right? Like,
I remember Friendster.
Yeah, right? Like, so.
They were so close.
So all of these, yeah, exactly. All of these comps, it's like other things equal, right?
But I think going back, I don't think Web3 should equal crypto.
Well, I think that Web3 is a superset and that crypto is like some of the subsets. So you will have some elements of Web3 that are like true, like punk crypto. How would you define the two?
I think
so we're not talking past each other.
Well, I think the narrative is being flipped, therefore, that Web3 is crypto, and I don't think it is. I think Web3 is the decentralization of the internet, and it's the ability to hold your own data and protect your own data. It's privacy. It is cryptography, but it's not necessarily that everything will be built using a blockchain protocol, which somebody sees an upside for. Plus, I actually think in this new Web3 model, I think the VCs are in a far better position than traditional investing rounds because they get in so early. And as I've said this a few times on the podcast now, you essentially get to IPO before you've had product market fit, which I think is wrong. You've raised money, you know what it's like. It's hard. You have to show what problem you're going to solve, and you step by step as you go through rounds of funding, you've got to show whether you've brought on users and whether users are sticking, or if you've hit a revenue a market that you want to reach. You have to kind of prove yourself to get to the next round, and you don't get to IPO unless you really have had product market fit. But by the time Solana is available in the market, by the way, I always say Solano to piss people off. It's always funny, you go in the YouTube comment, you're an idiot, Solana. But by the time Solano hits the market and becomes a multi-billion-dollar chain, it hasn't proven product market fit. It still has masses of technical hurdles to get through. So I actually think the VCs have a far better position in these investments. I mean, Multicoin's investment in Solana is like unbelievable, the returns they've had without product market fit. So I just don't like the Web3 equals crypto. I think it misses out a lot of other really important things that people are not talking about.
I think we would, again, we're probably in agreement on like one vector, and then there's shades of gray on the other. Like, so you bring up like Multicoin and Solana. So full disclosure, like, Kyle and Tushar were personal, like early investors in like the pre-seed for Messari. So,
okay.
Yeah. So, but I call it both ways, right? Like I've called out some of my investors at different times, and I have colorful debates on Twitter, even with Kyle to this day. But anyway,
I'm not saying, by the way, they're just playing the game that's in front of them.
Well, yeah, but it's more than that, right? Because so there's two things. One, anyone could have invested in Solana at like a $15 million valuation 2 years ago. They didn't, right? Two, there are some elements of Solana that are just more scalable than Ethereum. So the comp is not like Bitcoin or Solana. It's Ethereum or Solana, right? And we've seen this play out. Now it's much more centralized, or like some of the infrastructure is much more centralized as a trade-off there. Mm-hmm. We can argue if that's good or bad, but the protocol itself has product market fit because it has absorbed a ton of throughput and some of the use cases that traditionally went over Ethereum rails. Like there are just more developers that are building decentralized applications there. Again, you might argue this is just like turtles all the way down and there's nothing there for like these applications. That's a valid criticism, but my point is, if you think this is all moon fumes, they've got product market fit on the moon fumes that a lot of other people believe in right now. And it works. So we can talk about like I feel like a lot of the debates and a lot of the talking past each other comes down to like, what is value? And I don't think that this should be valuable. This looks like a multi-level marketing scheme versus like the thing that I own, which is technically superior and beautiful and world-changing and democratic and all these other things. Biology got me onto this concept. Russell conjugation.
No, tell
me. So basically,
I'm surprised you haven't told me as well.
Yeah. So I think and I was just listening to him on Ferris, so I'll just kind of use the exact same example. But like, I sweat, you perspire, she glows. Right. Same exact thing that's being conjugated in a different way, depending on your perspective and your audience. Right. And then I think the other one he used was something like, he leaks. The New York Times investigates, or something like that. But you could say the same thing with like any of these cryptos. Right. I'll try to come up with one on the spot for like, Bitcoin. I'm not even going to try, but
I know. Right? I see what you're saying.
Bitcoin, store of value, or Bitcoin is disinflationary. Ethereum is a rentier class because of this proof of stake switch where all the rewards are just going back. Like it's that same, the same general like constructs are being used as a criticism or a feature. And something to be lauded, depending on who the audience is and what your current holdings are, quite frankly. And I think that's true with some of these other like layer one chains and some of these other applications. But we're going back to like, that was kind of a roundabout way to answer like that specific example about Solana. I think the other thing that I disagree with you on, not for the reason that you might expect, but I disagree with you on the whole concept of public companies needing product market fit. I think that's actually an indictment of the SEC and the US markets.
Okay.
Because companies used to go public a lot sooner until Sarbanes-Oxley and until, a lot of the things that made it very hostile and cumbersome for companies to go public kept them private longer. And then the private markets responded to that dynamic because VCs could capture so much more of the upside. So their funds got bigger and the rewards were sweet. So, you combine that with the fact that you had a half dozen now $1 trillion tech companies that would ultimately acquire many of these top performers. And you had kind of a perfect storm to keep almost all of those gains privatized. Should Uber have gone public at 40 billion or 4 or 1?
Fair,
right?
Fair.
Right. And so, I think crypto is probably the extreme in the other direction that we have to be careful about, because should something go public at like $0 and then have this like immaculate conception that in reality, like all the insiders knew about or got tipped off to, so that they were like the first to deploy for a transaction. My point is, I think there's shades of gray, but I do believe that the market is going to ultimately win out in the end. And you'll have mechanisms where you can actually measure someone's like bona fide contributions to an ecosystem or meritocratically distribute rewards into these mutual models that, you know, people will flow to the chains that are the most, other things equal again, will flow to the chains that are otherwise fairest to the users that have been contributing value. Otherwise, you just have this dead weight issue.
Ryan, this is a Bitcoin show, and you're turning me into a shitcoiner. What's the next protocol I can buy at 15 million that's going to... No, I'm only kidding. Okay, let's flip back a bit. Let's go back
I'm disappointed. I had five because I know your audience is like
but like I said, my point is that
I want to like imagine like some of your audience right now, like, why the fuck does he have this guy on? I thought this was a Bitcoin podcast. Idiot. Get back to the Bitcoin stuff. We'll do it. I wrote a good chapter on Bitcoin. Come on, bring it back.
We will. But I just want to like round my point. It's just saying, it's like, look, it's going to happen. I get it's happening anyway. I just feel like, where are the conversations of Web3 which aren't talking about cryptocurrencies or tokens or NFTs? Because there's a lot of stuff that people need as users on the internet. There's a lot of things that the experience that people need. They need control of their data. They need better privacy. You know.
Well, here's the thing. So I think NFTs are a primitive that enables a lot of that. Just for instance, right? So, you know, my definition of Web3 was basically like, this is a catch-all term that includes cryptocurrencies, right? That's the native currency. It includes the layer ones. These are the kind of ledgers of record and the contractual like enforcement systems. It includes NFTs, which are like the discrete digital goods that you might use purely online, right? And that also could be the building blocks for your reputation. This is what I want to come back to. And then, you know, DeFi basically makes that a liquid economy, because you need a liquid economy to be able to just run anything like the metaverse. And I do think more of our lives are going to be, you know, kind of run online. So let's come back to NFTs, right? So there's like digital art, there's like profile pictures, there's these things like 95% they're going to go to zero. Mm-hmm. I actually think you can think about the NFT market kind of like digital art. Digital art right now is about a 1/1000th of actual art. In 2013, Bitcoin in its blow off top was about 1/1000th of gold.
Okay.
All right. So right now, Bitcoin's about 1/10 of gold. If digital art follows the same path that digital gold did, then we've got 100x from here. But that's 100x in market cap, not 100x in like projects across the board. So yes, 95, 99% of these things are going to crash, going to end in tears. People are going to be very sad. They're going to have a very overpriced JPEG. But let's talk about like the things that stay. All right, you still got, you know, pretty significant upside in this as a class, and it could open up new cases for Hollywood or wherever. But I'm actually much more interested in NFTs because, you know, you talk about protecting your own data or like packeting your own data, and like those being the Web3 use cases that you're actually interested in. I think that, I mean, NFTs are just a wrapper for any data. Where that data points doesn't really matter. It could be a profile picture. It could be your data record on Facebook, so that you can port it into a new front end application that is not run by Mark Zuckerberg, right? Same exact front end, maybe different algorithms. So, you know, you can customize whatever you want to see, and you'll basically permission access to your data record that way. That's still an NFT. The thing is, you're going to need, I think, use cases and toys that people speculate on that help pave the way for all that infrastructure before that infrastructure actually becomes useful. Another good example would be NFTs as a building block for like digital reputation or digital credentials. You think about a college degree. Did you remember like the whole like token curated registry thing like back in the day?
Yeah.
Okay. Yeah. So basically like TCRs were like, you could have a list of things, and if you post a bounty and the community accepts you, you can basically get onto this list. So it was like, you know, as a way, could we whitelist like ad-free domains, or could we basically like hypothetically anything, or could we create like a rank list of like influencers, or, you know, kind of create like a club vibe. That V1 was garbage. And I think DAOs as like kind of communities, like that infrastructure kind of took back over, and I think is more interesting for some of the early TCR use cases. But when you talk about credentials, a TCR could basically be like a token curated registry could be, you know, managing diplomas, right? Do you have a diploma from like X internet university? Because we all agree that like college is overpriced. And this will be a replacement that will like follow you anywhere and show that you have these minimum requirements. Well, what NFTs allow you to do is it could basically give you a badge, not only for every course that you passed, but for every test that you took, for every question that you took to basically just like complete the binary, right? And then depending on your performance on any of those tests, maybe you have an NFT that has like rarer attributes than the other like 10,000 people in the class because you were in the top 1% or you were very top of the class. So you basically bundle all these together and then you kind of extrapolate that to your work, to your, to your kind of social score, like basically whatever you want to be able to permission out, you could do. And I would argue that because you can do that in a way that is like completely owned and within your control or like managing your own wallet, it's transformative in a good way, not in like the Black Mirror, we're tracking your every move and we're like deducting and adding credits to your social system. And like that Uber episode, you know which one I'm talking about, right? Like there's a way to kind of selectively permission access to your reputation and your data using some of these primitives that today look like toys and look like garbage and you probably hate, but I think are necessary for the Web3 that we actually probably agree that we want to see.
What do you think, Jeremy? You're convinced you want some NFTs now?
I want some DIDs.
You want DIDs? The interesting thing on NFTs is that
I think there's similarities, right? I just registered TBI.eth.
Well, the NFTs have chipped in a little
as an identity
into the Bitcoin crowd. There are Bitcoiners who are like, fuck Ethereum, fuck so on. But they're like, yeah, I'm okay with NFTs. And we have NFTs on Bitcoin as well. I heard Samson Mao talking about using NFTs to issue concert tickets. Easy way you can have it as a concert ticket or a cinema ticket, and you can just use that as your access.
Yeah, as long as it's on Liquid, it's fine, right?
Yeah, those listening, like a little wink there. No. Look, I empathize. I empathize with your point, and it goes back. We just did an interview before this with Lane Rettick, talking about proof of work versus proof of stake. And one of the things I was saying is that I think one of the big issues is that actually I think the Bitcoiners have tried to do this Bitcoin not blockchain, Bitcoin not crypto, separate Bitcoin out. But I think it needs separating out for both communities in some way, because if you just ignore the ultrasound money crowd, who I think are fundamentally wrong and dishonest, it's just two different things. My metaphor for Lane was, you need wheels for an aeroplane and you need wheels for a car, but they're doing two fundamentally different things. Yeah. One is taking you across the ocean, one is like driving you down the road, but you consider them the same because people might consider them the same because they both have wheels. They're fundamentally different things. And like Bitcoin's separation of money and state, cryptos for me is just kind of like a new type of company creating kind of permissionless things to make the internet a bit better. I don't have a need for them and I don't really use them. Not to say that I wouldn't in the future if like I did have that need, but I think it's even more important now to separate what these things are, because otherwise it feels like a lot of the fight is pointless.
Yeah, I mean, I completely agree. I think the end all be all fight is for Bitcoin to maintain its status as like sovereign resistant money.
Yep.
And secure store value settlement, right? Let's throw out like current. I almost don't like talking about it as currency. It's too volatile. Like stable coins are a better product right now. But secure sovereign store of value for like if shit hits the fan, or you start to see currency failures, then yes, like the bet is still on Bitcoin. That's where all the action is. That's where it's going to be for quite a long time.
Well, I agree with you. Like if you're in Turkey right now, you probably want Bitcoin and stable coins. You want to put your savings into Bitcoin.
Exactly. Yep.
And you want to hold a certain amount in like dollar stable coins to protect yourself against the collapse of the lira.
And the thing is, we knew this was coming. I mean, I've been talking about this for years. I know you have as well. We're just now starting to see it actually become relevant in the US because we got 6% inflation.
Dude, yeah.
But
and the rest.
This has been the case in Argentina for years and different African countries for years, right? So, a lot of us when we talk about Bitcoin, we'd say, look, it's schmuck insurance or it's a digital gold, analog or replacement. But because it can also be used as money, yes, it's very volatile, but it also has upward volatility, not just like a persistent kind of depreciation of value over time like you do in some of these other currencies you're going to hold your assets in. So if like Venezuela and Argentina, and some of the African countries being the big ones, but you knew that they were going to be some of the early adopters and people there would actually use it to help maintain their own safety, right? And I think Tether has taken a little bit of that use case from Bitcoin for a lot of the same reasons. And now,
Yeah.
so I think that there's some truth to that. If you're in Turkey, would you rather have Tether or would you rather have Bitcoin?
Well, you need to live. So it depends. It depends it depends on your
But
net wealth as well.
But my point is, if your economy is going to be like, black market dollarized anyway,
Yeah.
then Tether is probably better than Bitcoin even, right? It's still a crypto asset. It's using crypto rails, but you're at least you're admitting defeat with your own currency, but you're saying we're still going to have a black market, where dollars are good. Like dollars will always be good until we ruin them. So
do you think in some ways it would benefit some of crypto to become quite highly regulated? And bear with me as I explain this, in that we stop having this argument about, because it's really, it's an argument about decentralization. It's like, well, Bitcoin's maximally decentralized. It's directionally decentralized, which is what I say. These other things are not really decentralized. It's decentralization as a spectrum, but they aren't really. Like, is it more important that these things are permissionless than decentralized?
Much more.
Yeah. So we could create that separation whereby, look, there is this whole decentralized.
I think it's important socially for them to be decentralized because you are more likely to trust that one of these systems is permissionless if it is decentralized.
Fine,
right? But really it's decentralization is an input to get to permissionlessness.
Yeah, but resistance to state attack, I think most people agree probably Bitcoin is the only one is truly resistance to state attack. Like always is best equipped.
Yeah, I mean the thing is we're not going to know.
Yeah.
we're not going to know until we actually see both.
Yeah.
A crackdown on individual holders and mining, because I could also argue the other direction with seeing how effective the Chinese crackdown on Bitcoin mining was, right? I don't think other states are as competent as the CCP, but they showed that it's possible, right? They could basically evict hash power from their country, and
that chart in your report,
wild,
fucking insane.
Yeah. So
explain it so the people listening.
Yeah. So basically, it's a couple of visuals from the Cambridge. It's a Cambridge study. If you just look up Cambridge Bitcoin mining study or whatever, it just came out. Comes out every few months, and they've had updates the last couple of quarters that show hashing power. Again, this is an approximation because not 100% of hashing power came out of China, but basically they rely on pool information for the source of hashing power, and China went from 60% to zero essentially in 2 quarters or 1 quarter. I mean, after the Chinese ban. So there's, I'm sure it's probably low. It's probably high single digits, low double digits is still in China, but it's just for obvious reasons not being reported. Regardless, that's a 50% change, 50-point change in market share that's just been distributed mostly to the benefit of the U.S. And the difference between the U.S. and China is if the federal government tried to ban Bitcoin mining, you'd have a real problem in Texas.
Mm-hmm.
Ted Cruz now, wants to make this, almost like a pillar of his next presidential run.
Yeah, Governor Abbott as well.
So you already have a state like Texas, which is arguably the most likely to secede or to really challenge the federal government on things like this. It could have its own standing army. It has, its own energy, and now it's got, a foothold with Bitcoin. I think it's going to be much harder to replicate that in the U.S. And that's just one example, right? So is the EU going to be able to do that? No, right? There will be certain countries within the EU that say, fuck off.
Yeah.
We have clean, renewable energy sources that are powering Bitcoin mining. And we have no other way to use it up here. It's very cold. And so we're going to basically use this money battery because we can exploit renewable resources and make money from it just like any other industry. So don't tell us, that's not going to get banned in Europe, for instance.
Well, Bitcoin's ability to help stabilize the grid or make it more efficient, and essentially, I'm not completely on this Bitcoin as digital energy thing, but as a way
I wasn't either. So this is what's super interesting about doing this report. Nick Carter had a great piece in CoinDesk on this. Yeah. And Lynn wrote about it too. I know you're a fan of Lynn. I've kind of come full circle on that because I thought your point about like Chris and like Web3 being self-serving, I thought that was like just total bullshit propaganda from like the Bitcoin crowd of like, no, this could actually be a good thing for energy. It's like, come on, man. Not like, yes, I know we have to say this so that we don't get lit up by the folks from Greenpeace, but not really. Come on, like wink, wink, wink. If you look at the numbers though, and you look at a lot of the arguments and the trend, especially with China off the grid now, I'm a buyer.
Well, no, so look, I buy it in the concept but I think if you say Bitcoin is digital energy, you have to say all money is energy.
Mm-hmm.
And then how do you get to that point? Well, yeah, to create, outside of the government, to create money, you usually have to, exert some form of energy, whether it's yourself or a business, you have to do that. And therefore you create this financial product, the output, which you then can use to buy more stuff, which uses energy. So it's like, if you consider like all money is energy, I agree that Bitcoin is digital energy and it's the most efficient form of monetary energy. But I think you have to say all money is energy. Otherwise, what happens when I sell that Bitcoin for money? Like, that's the only way I can buy into that concept. But either way, the idea that you can, one part of the world, use excess energy and create this pristine asset that you can move to another part of the world to use to buy energy, to me, it's just an amazing thing. But this Bitcoin's ability to stabilize or make the grid more efficient feels like something that's really only in the last 12 months become a real major talking point. And it's actually a great talking point. And it feels like it's almost come off the back of the ESG movement.
Yeah, that's why I think even folks that are naturally inclined to support it, right? Like me and you, and I think Nick and Lynn and others are in the same kind of camp. Like I think our bullshit detector is already very finely tuned. So we hear something like this, we're like, oh, this is very conveniently timed. That we're now everybody's kind of flipping the script. And I'd actually written about some of these operations like Crusoe Energy and some of the operations in Texas, 2 years ago in my report, end of year report. So we kind of knew that this was something that was happening. I think the switch was not ESG though. I think it was China, because I don't think it mattered. Like all these like renewable discussions and actually, cryptos, Bitcoin mining is not that bad. It didn't really matter as long as 80% was, being mined with coal during the dry season in Sichuan, right? So like it kind of fell flat because the US just had and Europe just had such a small market share. I think with that change in the dynamic of Bitcoin mining, now it's actually relevant because now you can actually talk about the entire market is X% renewable or X% clean, or like, let's get very like finely, let's split this into a finer pie chart so we can see how much is running with purely renewable energy, how much is basically in trapped off-grid energy sources that's otherwise going to be wasted, how much of this is like recycled and from flaring so that we're releasing like CO2 instead of methane. Now all of a sudden this is actually meaningful. And I think this is one of the things that I've come around to, that this matters now. A, because more people are starting to use it as an attack line, but B, it just so happened they shut off China. And so now we actually have like a credible like counter argument. If China comes back online and like unbans Bitcoin, and then we start seeing, all the coal powered mining just come back in full force, then that's a different story. But I don't know. I think there's something here. And the fact that you have politicians that are starting to actually talk about it, getting educated on it, I think is it's across the chasm moment. We'll see if it actually sticks.
Well, I was going to say the other part, which I think is a missed opportunity. Dan Moorhead didn't miss it, is the fact that everyone's focused on the E, but Bitcoin is so good for S&G anyway. We've missed that opportunity to come back and say, well, hold on a second. Let's have a net conversation about ESG.
Yep.
Okay, firstly, we have great arguments for the E. We're not perfect. It'd be great if all of Bitcoin was 100% renewable, but that's fine. We are stabilizing the grids. We are making the grids more efficient as well. We are able to move this digital energy around the world, and we are trending towards more renewal. But let's talk about social and governance. Let's talk about what Bitcoin does. But you didn't miss it. But did you put it in the report because you'd read the Dan Moorhead piece? Had you read his piece?
I don't think so.
Oh, I should forward it to you. It's really good.
Great minds. Yeah. No, I had read I think that is a meme, like, we're not that bad on the E, and we're really good in the S and G. I've probably heard from half dozen folks like Alex from Human Rights Foundation. I feel like has said things along those lines. There's a number of other folks. I don't recall seeing Dan's piece in particular. I probably have read it at some point. Wouldn't surprise me. So if I plagiarize it, just do a control F, like put it through your plagiarism machine, and that can be like the headline for this.
I trust you.
We talk about like TBI's Dan Moorhead plagiarism. Guilty as charged. I actually had a disclaimer in my intro. I was like, this 165 pages I wrote in a month. I borrowed from a lot of other really smart people. So if anything's plagiarized, A, tell me and I'll fix it. B, go fuck yourself. Because
dude, my whole career is built off other people's smart takes and observations. So
exactly.
I'm with you. But I do feel like the S&G, someone needs to go out there and really attack that publicly and say, hold on a second, especially because we have Republicans very interested in Bitcoin, but the Democrats will love the S&G side.
I think the problem is no one really thinks about S&G as a positive because it's an indictment of their failed leadership.
Yeah, fair.
So, if we can't really talk about the S&G, like all we can do is really
if Bitcoin was negative.
Parry, minimize the E damage and say, this isn't that bad for the environment. But as soon as you start getting into social, now you're opening up a whole can of worms. And you will never be right if you're on the long, like no fact will ever get you on the right side of the woke narrative if you're on the wrong side of it, right? There's no data that will get you out of trouble if you are on the woke side of the wrong side of the woke agenda. And when it comes to governance, you're talking about removing the country's ability to print money at will and having a check on its ability to print money at will in perpetuity, because that is what Bitcoin is and is how it was born. So that you can't really go into DC and be like, yeah, this is great for E. It's fine for E. It's good for S for fact-based people because we don't live in a fact-based society. And then it's good for G because we strip people like you of this like money printing authority. And like everybody would agree that's a good thing, right, Congressman? So it's
fair.
I think we could talk about it and I think we have to win this like in the court of public opinion, not necessarily the actual courts, because we'll lose there.
Let's go back to flippenings because we mentioned Bitcoin flippening gold earlier. You in your report talking about, I've got it here, the king will stay the king, no flippenings. I got a text the other day from a very well-known crypto trader, Twitter personality, told me the Bitcoin flipping is coming. And I hadn't even looked at the market cap of Ethereum. And it depends what you consider the flippening to be, whether you do it in Bitcoin terms or Ethereum or dollar terms. But really, I think if it is a dollar flippening, people will call it a flippening. You don't think it will happen? 20% chance, you said.
Yeah, I go back and forth. I think.
Does it matter?
Well, it definitely matters for Bitcoin holders. I mean, I think it's uncharted territory, right? As soon as you dethrone Bitcoin, I think you lose one of its narrative elements that it's like the bellwether for the entire asset class. And if Bitcoin is going to be, sovereign resistant, like censorship resistant money or digital gold, I think it's important that it maintains its top spot. So one flippening that I think could happen, and it's already happened arguably, right? Like Bitcoin dominance is below 50%. It's happened multiple times in history, right? So we've already seen Bitcoin become a plurality.
But that's a weird figure because
why?
Because if it was just versus Ethereum, it's just a race between two. If it's versus the whole crypto market, every year a load more tokens, projects come out that can eat away that market share. So it's a weird comparison. I always felt like the dominance, like if the dominance was based on the top 10 and those top 10 never changed, then fair, let's see what's happening. But there's so much money and things going into everything else. So it was always a weird number. Yeah,
I mean, Bitcoin does not look strong right now from a trading perspective. Nope. I mean, the question
is always a good time to buy.
I think that's my midwit answer. Either my 70 IQ or midwit answer. We're not going to know. Like if there's a flippening, then it was a midwit answer. If Bitcoin rallies from here, then it was a good 70 IQ move. But so that 20% figure is way down or way up rather. Because if you had asked me a year ago, I would have said not a chance. Because I still think that Bitcoin is a bellwether, and the money flows through Bitcoin first and foremost. When it comes to like the bigger investors, I'm not entirely convinced that's true, and I think it's been death by a thousand cuts to a certain extent. But Ethereum has many other competitors. Bitcoin really only has Ethereum as a competitor. It has no other real monetary competitors. Whereas Ethereum has
I'm going to slightly disagree.
20 other layer ones. All right. Who's competing with Bitcoin?
There's use case competitors, which I agree with you on. But really, we're not always talking about use case competition here right now, because we're still in a speculative phase. We could be for many years during the speculative phase. It's really your competitors anywhere else you want to put your money. Your competitors are stocks and gold, for example. But really, we're talking about the crypto space. People coming in, they can go on any exchange. They can buy Bitcoin. They can buy Ethereum. They can buy fucking Shiba Inu. They can buy Solana. They can buy anything. So I think its competitors are, if you're a speculator, its competitors are everything else on an exchange you can buy. And I think that's where I would say it is. You understand the difference I'm pointing to?
I do.
And your market cap comes from the money that goes in.
I mean, if that's your definition, then the odds are stacked even worse against Bitcoin.
I think so. That's why I think so. I mean, at least previously, before you had to buy Bitcoin to trade other shitcoins, that gave it a bit of an advantage when a lot of the exchanges were.
Yeah, and now arguably Ether is more of a unit of account for some of the things that are happening, or Solana, or now the reason I said it was kind of a two-part thing. One, we will eventually see like a Bitcoin, like digital gold flippening of gold.
Yeah.
But I think we're unlikely to see something where Ethereum flips Bitcoin. And the reason is there's a lot of other Ethereum competitors, including the layer 2 blockchains that are going to be processing all these transactions, that are going to absorb more of that volume going forward, right? So we already know that Ethereum, as like a base layer chain, is not going to process 100% of smart contract transactions. I mean, it never was, but now we know, because even the community and even the developers are saying the way that we scale this is to have one beacon chain where transactions settle and basically any high value settlement occurs. And then you delegate to other layer 2 chains, whether they're using kind of zero knowledge proofs or Plasma or optimistic rollups, or they're coming from like an entire different blockchain entirely, different structure. All of that is ultimately secured at the sub chain level, and all of that is going to have its own economics. And that's what we've seen with Solana and Avalanche and Terra and Cosmos and all that this year. I think the question is, so I do think that you'll see that group of layer ones, right? The Ethereum and friends will collectively overtake Bitcoin. I think that's basically a foregone conclusion at this point. And I wrote it in the report, but this is from Arthur Hayes from BitMEX. I think he had the best framing of it, which is, do you think that M0 or big tech is going to be bigger in terms of market cap? Well, we already know that like Facebook, Amazon, Microsoft, Google, Apple are already bigger than M0 themselves. So I think that is probably the right way to think about it. The much bigger issue for Bitcoin is, if it's not actually used, like wrapped Bitcoin needs to be ubiquitous across these different chains, and it's not. That's one of the biggest issues that I think has to be solved for in the near term, or my probabilities are probably going to flip.
I'm not going to wrap any Bitcoin. Wasn't there a hack recently that involved wrapped Bitcoin?
There's hacks with everything.
Yeah.
It's early days. I would like to see more of those hacks, because it means that the shit's actually getting built. I don't want to see more victims, but I want to see more hacks, because it means that things are actually being built and stress tested, and you're fixing some of this stuff.
I think that's a good post-rationalization for the hacks. Listen, one more thing to talk about. A little bit.
God, it's not.
Do you want to see more of your Bitcoin hack, Jeremy? Because that'll make it more secure.
Don't bring me.
He's not a risk. He's not using a bridge.
He's not.
You know what? The guys that are using the bridge are taking the risk. They're going to make money on whatever the bridge protocol is because they're getting incentivized to do so. So they're on a risk-adjusted basis. They know exactly what they're signing up for because it's early stages. If you guys want to sit in the corner and wait for the big boys to like figure everything out so that Bitcoin is actually useful.
Bitcoin's already useful, man. Bitcoin's already useful.
Lightning.
Jeremy's not going to do it because he's a smart guy. Okay, look, one more thing I want to talk about.
I own a lot of Bitcoin. I think everybody knows that.
You've probably got way more than me, dude. One more thing I want to talk about, though. I will recommend people go and read the report, and we'll put it in the show notes. I did really enjoy the I only read the Bitcoin section, but I did really enjoy it. I thought it was brilliant.
That's all I expect.
Especially the Chinese bit. The China bit was brilliant, actually. And actually, the ESG bit was really good as well. But let's talk about ETFs, because I know you care about this. I know you've been very critical of the SEC. I don't understand how the SEC works. I'm not going to pretend I know any of this, but it feels like we are ready for an ETF. Other countries are getting ETFs. Canada has an ETF. It feels like we're ready. It's like, what is Gensler waiting for?
He is waiting for complete control and surveillance of all of the US-based crypto exchanges.
Basically, they've got to register.
It is hostage taking.
Yeah.
He is a political animal.
Yeah.
He wants control. And ultimately, he wants to be able to either hang a couple scalps or notch a few wins so he can burnish his resume for Treasury Secretary.
Okay.
This
no,
100% politics.
Yeah.
And Elizabeth Warren, who's a very powerful senator on the Financial Services Committee, hates crypto. And so, he's, I think, lockstep with her and currying favor. And until somehow, whether it's through congressional authority or some executive order, which would be, the details of that would be muddy and would probably get challenged. But basically, until he has some type of, I think, congressional authority to oversee US-based crypto exchanges and some clarity on what constitutes like a new security under the token regime, you're going to see just a bunch of stonewalling. He could get away with doing, with allowing the futures-based products because the CFTC regulates the futures. No regulator in the U.S. has oversight of the spot market right now, which is what he's holding out for.
So it's probably not going to happen for quite some time then.
No.
It's a real shame because,
I mean, like I said, it's hostage taking.
Yeah.
Like, to call
for
it
one man's
anything,
career.
Yeah. To call it anything else is dishonest. So,
all right, fuck you, Gensler.
Your words, not mine.
Can I get in trouble for that? I don't know. Should I not be? Should I get in trouble for that one?
What?
Can I get my I get blocked from coming in the country or chucked out for saying that?
No, I don't think so.
All right, fuck you, Gensler.
There you go.
I got a feeling he owns Bitcoin anyway, but like, I mean, come on, give us our spot ETF. Come on. Okay.
Well, here's the thing. It's one thing for them to not approve a spot ETF, an ETF period. But the way that they went about this, so basically there are four different products you could have. You could have a foreign ETF, right? Which we have a bunch of now. You could have a futures-based ETF, which comes with this 5 to 10% annual cost. And no institution is going to hold this because it's a complete piece of shit.
Mm-hmm.
You might hold it for hedging purposes or for kind of very short-term swings or positions, but you're not going to hold it because it's like a guaranteed loser long-term. The third is the spot ETF. And then the fourth is this disaster that we have basically trading OTC, which is these quasi ETFs like Grayscale's trust, which came public through something called Rule 144. Essentially, it's a loophole that allows you to trade this like public trust, raise money from accredited investors, and then after a 6-month or 12-month holding period, you can list them in the public markets.
Right.
OTC, right? We've now got a $40 billion trust in the Grayscale Trust and their Ethereum Trust and all these other ones that trade in the open market, and they trade at like 15%, 20% discounts now. You can't, in a real ETF, you would be able to redeem those shares for the underlying.
Bitcoin, yeah.
They're locked. And so basically, Barry Silbert is Gary Gensler's daddy. I was going to say like the reciprocal of that, what Gensler is in that situation. But yeah, essentially Grayscale wins. Gensler wins because he gets to take hostages and advance his political career, and investors lose, which is why, again, I try to pick my battles, but this guy, I just think he's a snake.
Okay. Well,
So
fuck you, Gensler, then. Let's stick with that. All right. Well, look, wicked. We won't give away everything. We should get people to go and read the report and read about everything else you put in there. But look, great to finally get you on. Tell them where to go and download the report. I'm going to get a load of shit, by the way, for the amount of shitcoin talk we had.
Every once in a while, people got to open their minds, open their hearts, and accept the shit.
It's a meme itself.
You know what? If nothing else, this can be like a sign of like the shitcoin top. I don't think it is, but you can go and tell your listeners, I had them on in a moment of weakness because we thought that the flippening was here, and then you can turn around in 3 months and do your victory lap. Like, I told you it was never going to happen.
I had you on because you're my friend, and you are a Bitcoiner.
Long overdue.
You are a Bitcoiner, and I like talking about Bitcoin with you. We've just veered off into the shitcoin stuff, but whatever. Where can they get the report?
Messari.io. It is all over the homepage, and I am at 2BitIdiot on Twitter. We're at Messari Crypto, MESSARI Crypto on Twitter, or MESSARI.io for the report.
And go straight to page 36. I think it's page 36, the Bitcoin section.
You would know.
So.
Yeah, you clearly looked it up. There's a table of contents.
There's a table of contents. Read the intro as well. Listen, go and check it out. Thanks for coming on, Ryan.
Thanks,
Finally,
man.
Take care. Good luck with everything.
It was a pleasure. Thank you.